Hey crypto friends, time to have a talk about crypto again. Lots of interesting things happening in the world. Yes, indeed. You may be asking, what's the direction for crypto? Well, we've had a bit of a rocky period overall in the globe right now, and it's all about, they're going to make it all about tariffs. Let's be clear about something. The United States pre-election limped home. It was and has been in a recession for an extended period. They'll be forced to recognize that soon because it will be severe. But you are in a recession once you already met the criteria for a recession, and things have generally only got worse. However, some might say there's still inflation out there. Yes, indeed, and tariffs are inflationary. So when you have a debt Ponzi, how do you deal with a debt Ponzi if you're a government official? Well, the truth of the matter is you want to deflate that debt Ponzi. How do you deflate a debt Ponzi? Well, one of the ways you deflate a debt-based Ponzi is you allow your currency to devalue. So here you have this heating up geyser building in pressure because you've continued to proliferate currency and it's getting into the red zone. It's going to blow. One of the things you do to reduce that debt scale is you can allow the debt to devalue, which the US has already done quite successfully. It lost treasuries 45% to the downside. There's a chart for that. I've shown it before. Avalanche, the 2020 call in August, we called it short. It's fallen 49%. We can show it to you on TLT again. Debt value up, my apologies, debt valuation down, sees interest rates go up and the currency go up. Dollar has been dominant until recently in strength. Not been helpful for the crypto market, who's part of the anti-fiat category. We've shown you a diagram for that too. Remember, the king of anti-fiats is in actual fact gold, and it's the first to move. It's a senior citizen. It doesn't sprint quite like the silver or the Bitcoin will, but it is the senior citizen and it stands there. Gold has been running. As yet, silver's really not yet got its mining shoes on. Running shoes, I should say. Mining stocks have also not quite got their mining shoes on or their running shoes in terms of growth. They're starting. There is signs, and we're seeing signs of some firmness in silver at the moment. But these are the anti-fiat categories within the green boundaries. Also part of the anti-fiats are the crypto markets, and the king of the crypto anti-fiats is in fact Bitcoin. To start, and it has been one of the better movers. Look at its performance compared to Ethereum and look at the Bitcoin dominance chart till recently. Bitcoin has been one of the bigger movers. We've called a beginning of a reversal turn, and we will check in with that. And I think that is going to manifest now. It's no longer going to be the biggest mover in the long term, but for a potential demand destroying event, which we'll cover a little bit more. But I just want to reiterate the diagrams of how things are. So you need the fiat. Every system is essentially a debt instrument and a currency. Everybody talks about USD. They keep you currency focused. They don't want you to understand debt. They don't want to make it sound interesting in any way. A debt-based fiat system, the dollar is borrowed into existence. In short, every time you are talking about the dollar, you are in actual fact talking about, let's type it for you, UST. Let's do it in caps as well so it really pops. UST, USD. That is the pair, the liability and the currency. That's what you're talking about. Now recently you've seen that the USTs collapsed by 45 to 50%, pushing rates up, debt value down. Rates up, debt value down. Again, we have to show people how that actually looks. Debt value down on the right, my right here, rates go up, housing gets hammered, consumer gets hammered, debt down, you borrowed too much, you hurt your consumer. Credit card payments higher, car payments higher, refinancing higher, dollar goes up. Globally, money floods into the dollar to get the higher interest rate rather than sitting in the pound. Dollar dominance, dollar strength. Not good for the anti-fiats, which is where I left you. So that gives you a little bit of a feel of how the system is. What's happening now? Well, Trump would like a recession. Why? Why would Trump like a recession? Well, there's someone called Lutnick who recently came out. Let's stay with this one. And he says, it isn't the end of the world if we have a recession. The tariffs is good policy. Why? Tariffs brings jobs back to America. It adds inflation to the world. Instead of getting the cheapest, best quality goods, say from China that is mass manufacturing them, you are saying we want to make those things here, but we have to pay American wages, pension contributions, healthcare, etc. for all these staff members we have to employ. The cost of labor is higher. To replicate the same product made domestically will be more expensive. How do you make it less of a inflation pill to swallow? So all tariffs are without doubt inflationary. They're also protectionist. And the only time protection should exist is if someone else is dumping something government has subsidized to make abnormally cheap, which broadly is non-economic and typically not done for too long, and is usually spotted. So how do you do it? Well, you make your currency, having just crashed your debt, you've crashed your debt, boom, down. You've allowed a lot of the pressure steam out of that valve. Everybody is now extreme short. Everybody is extreme short now. Let's have a look at this. In the long-term treasury, they're late shorting treasuries. They're extreme short on the TLT ETF. So what do? You stop them from making money there. You stop releasing the pressure on the debt down. You bring on a recession, which is tariffs combination, which will push up inflation. Stagflation is policy. We know inflation is policy. When you are debt hyper devaluation stage, stagflation becomes policy. You need to get rid of that huge debt. That's what Volcker had to deal with in the 70s. You devalue the debt. Which we've now had, the US debt devaluation, and then you do some currency devaluation. So that's the inflation and the stagflation together. Everybody's now shorting debt. Too late. Let's go and release some pressure via dollar devaluation. And instead, the debt stands still for a while, and we release the pressure out of that valve. Why? Rates will go down if the debt valuations are actually allowed to climb up, which is typically what happens when you have a recession. Fear! Your stock market goes down, the stock market crashes. Where does it run? Bonds is the other part of the market. The institution will buy. Hence why the debt will actually get a bid and flush out your extreme shorts that are late to the trade we gave you on the market sniper in 2020. 4 years late. Druckenmiller, Paul Tudor Jones announcing at the back end of last year they short US debt. They should now be short Europe's debt because Europe's going to do what America did. The buck is being passed for a synchronized collapse of the global economy. European rates are going to go up. What's that going to do to Europe? The European rates go up. The currency will actually go up. You've seen the euro gain strength. It's not because it's a great economy. It's not because they're doing smart and awesome things. It's because interest rates are going up because the debt devaluation is going down. Again, remember, interest rates up, debt devaluation down. Same over here. It doesn't matter whether it's a United Kingdom or a US or a Japanese diagram, we have when the debt value is being held up artificially by the Japanese, the rates stay super low, the currency crashes. When you allow the rates to go up, the debt value is crashing and the currency goes up. These are seesaws. Currency and debt, you should view all forms of nation state as a function of their debt and currency. Their debt and currency. The Zio cartel does not want you understanding debt, does not want you knowing how badly. They want it to be this confusing thing that's kind of boring that you don't worry your little head about too much. Okay, none of this sounds like it's got a lot to do with crypto. So let's go to crypto and get to the bottom of where we are. If we to have a recession in the American market, what's actually going to happen is there's going to be a bit of buying of the Treasury. Fat boy gets a chance to breathe. Here's the debt level, the water level in the fishbowl. He gets a chance to breathe. The currency goes down. Skinny geek gets ducked. He's the tech guy. He is your Mag 7. He gets a chance to hold his breath under the water while Fat Boy gets some oxygen. That is how it works. The treasuries will get bid. The shorts will get frustrated. They'll be going into losses. They chased in a little too late in terms of the TLT. And the currency will ease. The euro will climb because the euro nations will be doing the exact opposite. They're now going to spend on a military industrial complex. Volkswagen is going to use their dormant plants, the government has said, for weapon manufacture. Here we go. Overnight, we're going to start a military industrial complex in an old car plant. Isn't that fascinating? Imagine how efficient that is. Imagine how much money is going to get wasted. Imagine how much new money created to throw money at the arms dealers and arms builders. Yes, we all know who steals so well out of arms. Who loves arms and arms dealing? You know it. I know it. Who are the great peddlers of war? There's never been a war they don't like, and they'll always find a von der Leyen or a Agent Orange that will provide money for more war. That's right. Germany's going to do that. Their rates are going to climb from 2.5%. And they're going to run 4%. And the Dutch and the French are going to run 4.6%. And the British are going to run 5.7%. It is going to be damaging to their property markets. All that is going to happen as the US is half a cycle ahead or behind, depending on how you look, where they will actually getting some fear money coming into their debt markets. So, what make this make sense for crypto? Why are we discussing this? Why are we discussing all of this interesting information when we're discussing Bitcoin? Well, Bitcoin is an anti-fiat. The king fiat is dollar. If the dollar might soften in this period, Bitcoin might not go down so hard. What is it doing? Well, Bitcoin isn't having a good time. How much of the engagement in crypto is driven by retail this bull cycle? Very little. I'm going to be tempted to show you 2 zeros. It's not 2 zeros. It's not absolutely nothing, but it is not significant. In short, the ETF, the trade, the grand game, this is a new world order game, and it is all about Finkelstein of BlackRock and many other things rather than about Bitcoin itself. And right now, they're not getting the love. They're not getting the move. Gold and silver are. The institutions, they are not buying BTC. For all of Michael Saylor's huffing and puffing, it is looking soft. Of course it's a higher beta. Of course it's climbed far more in percentage terms, one might argue, than Bitcoin for what it is did over there. You are in that trend. You might even be at the bottom of that trend line. You might be about to get a bid. This is not a highly convincing hammer rejection, having fallen from that low volatility period that we told you about a while ago really hard. We had a hammer. It looked like it was going to get bought up. We said we needed it to finish and make another hammer again, and if it failed to and closed near the bottom, it would undermine and detract from that single candle that showed that there was a bid. It means that bid got overwhelmed and the sellers won out on the next candle. That's exactly what happened. We didn't get our second hammer we were hoping for. It didn't come. And as a result, Bitcoin is in far more of a twilight zone than a bullish one. What could be happening next? Well, as you can see, for the week so far, only really Monday, Tuesday in the bag, we have a very small bodied, very small range, low volatility. Why might it be lower volatility? Well, you just previously had 2 high volatility candles. And of course, if I put my draw back on, you had a double top, the blue line. Let's reduce that, that's a bit big. You had the neckline and you made a target to the downside. That is actually a reversal pattern that triggered and traded down and performed to target. So actually on the smaller time frames, I would classify it as the daily time frame, not the weekly. The weekly you are in a bull market. On the daily time frame, you triggered a sell-off with a trade to the downside. You made the target and you made a new low after that target. A marginally new low, which typically can mean maybe we're starting to see the end of a sell-off. It's not a bottom call. It's not strong enough. You could still throw in a channel down, a falling wedge down. You won't make a valid inverted HVF, which is good news, because that would take you even further down, and violently so, with a break. But this is not broadly that positive. Did you get a major snapback reaction to the highs like you did there? No, you did not. So the zip and the zeal behind Bitcoin is not really there. You may be close to a localized low, but we need to see a whole bunch more. We have no clear patterns. We've just had a major expansion. The future for Bitcoin right now is actually pretty nowhere and not that great. Time to look at what one or two people, one person was saying, yeah, you're wrong on Bitcoin dominance. Are you going to, admit it and all of this? We're not wrong on Bitcoin dominance. This is a big time frame call. Bitcoin dominance in the last 4-hour sessions is actually trading up. And we said that was a low, a likely low, a possible low. That's on a 4-hour time frame. If that trades through and runs that, then we've made a lower low. Then maybe you can start saying we're inaccurate on that. On the weekly time frame, this is an inverted chart on Bitcoin dominance. Please remember, we flip it upside down. On the weekly time frame, whenever you're looking at a weekly chart and you want to say this looks like a bottom, it isn't going to turn straight away. These are big time moves. The validation for this will be some way off. Let's put it even on a monthly chart and stretch it out. This is a huge call. We are saying that buyback halfway up looks like a final capitulation. However, were we to get a demand destroying event as a result of a recession that Trump is going to push you on, go think about the currencies, the debt markets and everything we said to you about that. The sell-off, the drop in rates, and retail, the few retail that are in, started to sell, and it gets contagion. Or we get some geopolitical event that jumps with all of that and really, really squeezes us down. Then you could indeed get a final sell-off again of Bitcoin one more time. And we've allowed for that in our predictions. Overall, we've said in 4-5 years' time, you trade 20s for Bitcoin, percent Bitcoin dominance. Remember, as we go higher here, it's less significant. Bitcoin becoming less significant versus the other crypto tokens that are in the mix. Okay, so with that said and done, Bitcoin dominance remains to be seen as to whether this is the turn, but it cannot be said it's not the turn either. This is a weekly time frame that we're just bringing back up. We've moved off the monthly and we've said, is that the low? You are in nowhere land here, and it hasn't, and it's not apparently clear whether it's reversing or it will have another dip attempt on the dominance. So Bitcoin is not doing that great, but Ethereum is the real loser in all of this. So if we take a look at the total And we've got that over here. Bitcoin, there's ADA, not particularly strong despite the recent interest. Total 2 is actually worse than total 3. You look at that sell-off, look at all the lines, yep, down, a red candle all the way there. You're heading down on OBV, lots of negative volume. There's short, big short call. Total 3, usually not typically better than total 2 most of the time, actually is better and made a new high where total 2 didn't. That is the effect of XRP, ADA, other major movers in the crypto stack that aren't number 2 in the list. 232, 142. It's only 90 billion, he says. Only 90 billion. Getting a lot closer than it once was. That is, sorry, apologies. I was pointing to Tether. It's a bit more than that. 126. So that would be 110 billion before XRP can flip Ethereum. But it is now in the 100 billions mark. And there is real support for XRP at the $2 mark. So what of XRP? So we've already said BTC is in a twilight zone. It could sell off. It could slowly get a bit more momentum behind it. But I think the environment is a bit precarious economically. And I think the stock market is going to fall. And I think in due course, the high beta risk off of Bitcoin could fall. This asks the question, what could go down with XRP? And this is a difficult time to talk about anything. So our likelihoods of being correct are very low. Probability of outcome is low. Is this a good trading environment? No. Is it a high uncertainty environment? Yes. Is it a high uncertainty for a collapse in the general economy? Yes. Hence, defense from me. I am defensive even at an investment level, and I certainly have no leveraged longs. Could an argument be made for downside trades? Possibly. So here is one outcome that could occur. Falling wedge for left shoulder, my apologies, left shoulder. It's possible XRP could be in a head and shoulder. You made the second armpit. There was your first interaction with the $2 level. The $2 level is clearly very significant for XRP. So is this broadening structure that I've drawn here with the sell-off a right shoulder? It could be, but it doesn't have to be. It could be, but it doesn't have to be. It will depend on what happens for crypto overall. Where does that target take you? 117. So in an environment where we still say, and for all those who write in the comments, we still say the macro is $19.35, you can have a journey path that could see you sell off through 117 on that head and shoulder if the $2 neckline is properly breached with a close. Note, on none of these days since here have you closed below the $2 mark for XRP. If this were to turn down violently on news and risk offing, this potential sell-off could make for a very interesting opportunity to maybe get long on the next solution. But don't rush in. We'll trade on a pattern. We'll watch on lower time frames. We'll wait for the high volatility selling to end if that were to occur. However, I also want to point out it's not clear that it definitely would occur. If I look at the candles, and I was explaining this to my community not so long ago, they're all in this range. And actually, the descent from our localized high, remember 336, we told you 336. This was the candle that traded literally 340. If you sold 336, you got out literally there. And we said this will be a localized high. How did that call work out? Pretty good. It's a localized high and has now been since early January. And we are now mid-March. And all XRP has done, candle bodies level, is that. One quick spike and then dump right back, that and that. Since then, you've had one interaction, two interactions, and three interactions where you traded sub $2 on a 336 close your XRP call. Sub 2, 3 times. since the call to close at 336. Okay, so it's a good call. However, overall, this momentum for these candles is not violent. You went up far quicker here than you've come down. So it's also possible that if nothing too dramatic happens with Bitcoin, that you could go up. You may even go all the way up to our broadening structure top line here, and of course our flat line there, and still be in the mega structure. And then you can come back down and bounce on our splitter and mess around. So that would be quite a positive thing to happen to XRP. That could be on Trump news, getting some pumpermentals into the digital assets because we've got so much debt. We need to have make some money in this system. And then you could come down all the way to 2 and still be in the broadening structure. In short, once we entered the broadening structure here, it's very hard to tell because it is an ascending broadening on this upside. Everybody wants clairvoyance from us. There's times when we're highly useful and we see pattern structures, and it's time where our guess is quite likely to be worse than yours. This is a churn period. It could be a head and shoulder to the downside. It could also be a swing up and still remain in the broadening structure. An ascending broadening structure overall on a bull pole, generally but not exclusively, this is not high probability but it's guidance, generally is bearish. So that would point to a break of the 2. So actually a sell-off down to 117 could be quite good, because then we do away with this volatility that is in a broadening upside tilting structure, which is overhangingly confusing, imprecise, churn, and a little bit bearish. It could be good to sell off, get any downside done, and then start a nice move back up where we could set up a future upside HVF, for example, for the next move towards the 19 target. Something like that would do us just fine in and around the 2 level. Again, that would make the high one of the 3.36 we provided and suggested people take profits on a very useful exit point. In short, there could be quite a bit that transpires now that is just coiling, selling off, churning, dissatisfying, largely not beneficial to trade in on the daily and bigger time frames, because you've already had a real Christmas move. We did famously here, and hopefully many of you did too. But that phase is over. You harvest and you eat well and you feast. But sometimes you have to plow, and sometimes you have to seed, and sometimes you just water and you don't get fed, because that's the phase you're in. And that's kind of how it is right now. Too much uncertainty on the macro time frames could actually sell off that give you a future great opportunity, but don't make for an opportunity right now. In other words, every major move, don't forget the setup here was a long-term spikes and dumps, setting up a volatility squeeze that gave us the original $19.35 call, plus the first interim and second interim calls we've made, and the smaller upside HVF. We had an upside HVF in this, even though I've drawn it as a falling wedge, that led to the 3.36 call. After a major localized high has been made, it's a localized high for a reason. Not much good happens for a period thereafter. How long's that period? Can't answer you. I know you all want answers. When moon? When moon? Tell me how much. Where's the cheapest point so I can buy? We don't have those answers. We have probabilities and we have clues, and we've got to do our best with part of the pieces of the puzzle. But we have quite a lot more pieces of the puzzle than the average crypto guy on an on balance of possibilities and probabilities basis. That's why we have HVF method. That's why you can click below and not get wrecked and learn real money management, so that you can build wealth, preserve capital, and buy yourself freedoms in what is turning out to be an economic reset totalitarian time, where the digital surveillance system is coming for you. And I would imagine those 3 things are kind of useful. Rather be a rich slave, rather protect your money, and rather secure as many freedoms as you can while you can. And unfortunately, money, the beans, the tokens, the shekels, the gold, the silver that you hold will be the thing that will give you greater liberty. That's it. So, XRP, indistinct, slight risk of a head and shoulder to the downside potentially, but also could bounce inside its structure. Plenty churn. Is it overly bullish? Not really. Oh, we also did, and it's important to mention this, we also did quite a bit of work on the total, the USDT.D. And here's the thing with that. We've shown this one before. And on the daily time frame, you did indeed have some upside structure. We showed this before it broke. We've shared it on the Crypto Sniper in the X profile. So sometimes we just don't have bandwidth to record long form videos for every small move that we can see. If you're not following us on X, you might miss an observation, a short quick pick that has an observation with a comment associated to it. This looked like the 3.8 in terms of USDT as a percentage of market cap was a support, and a neckline was there. This formed a squeezy, Japanesey, also good, how you might like it, to the upside, a major move that ran all targets, a sell-off and a surge higher. In short, at the moment, the USDT dominance is showing a reversal and money being parked up in Tether. Let's say that again. People are moving into Tether, and it's a reversal so far. And big targets have recently been made, so it could mean you get a little bit of a rest. And some might argue that's your rest. Maybe you get a deeper rest, and that could mean rallies for crypto. Maybe you come all the way back down to the neckline and you start to make new lows, and we end up with some channel or broadening structure that leads to those new lows. As yet, we can't say. So we need more footprints in the sand to tell you what animal this is, especially after major volatility and substantial moves. It's like the new rains have come, it's cleared the deck. We need new spoor, new footprints to do the tracking. And as yet, that's not around. So we don't want to say anything too high probability, but it does look like, remember there, 3.8, it does look like twice and potentially a third time a while ago that you've rallied off the 3.8% for the USDT. Let's have a look at the USDT on a more bigger time frame. This was the reversal sell-off to the downside that started the bull market. That was peak Bitcoin round about $15,500 at that juncture. A lot of money hiding in Tether. Then it broke down. This was your bull market. That was your rally. This is back down to a similar level and you are rallying up. There is a possible risk. Low 1, low 2. Quite steep down here. Quite a brutal sell-off. Quite steep up. There is a possible risk that you may do one of two things. I'm going to come back to Bitcoin in a minute, by the way, that I've just realized there's something else I want to tell you. That could be a setup for further upside or downside. So we could be getting a coiling in Tether with regards to upside or downside. So let's have a look at Bitcoin. Let's go back to Bitcoin and highlight a few things. So your last high in Bitcoin was November of 21. Remember the high the years before that was 17 of 21. So 4 years on the halvening cycle, odd number 17. Before that 13. Yeah. So 17 December high was the top. November 21, 4 years later, roughly. Add 4 years to November 21 and you have 25, probably November, December, Q4, if you remain on the same cycle. When did this localized high 64,000 occur? April, Monday the 12th of April. We are the 13th of March today that I'm recording that, not far off. You were still pretty high here in March. There you are, 8th of March. You were pretty close to, you made a 64k high then. Then you had a sell-off, a concern. Now, it wasn't the CV19 concern. That was, obviously, in 2020, a little bit earlier, March 2020. That drove the power with the print that went with it. Only you no longer have the same debt ability by America to create that amount of money. No one will buy the debt market. You need the debt market to be where it was so low, 0.3%, because everyone was in such fear that they'd stampeded out of stocks and into debt. And you won't get the same run into the debt markets again. So you cannot get the same scale quantitative easing. Even if we were to get a sell-off, the debt market funding system won't allow it anymore. America's bottomless overdraft has been reduced. The black Amex has been cut up and the blue one, the standard one, has been sent over. Live within your means now. That's what the turn in 2020 and CV19 did. Failure to adhere will lead to total debt-based collapse, interest rate spikes, which could lead to a short-term spike in the dollar, which would be very disruptive for crypto and other risk-on assets should that happen. So the ability to print, as was printed in CV19, does not exist. So you could have small decay, managed decline crisis that could see this kind of a pullback move. Are we here, in short? Is this, let's draw it, localized high, sell off into low, sell off into localized low, grind a little bit lower. I spoke of a falling wedge. We called this as a long, by the way, with the back up. It was a bold call, and in this instance it worked and was accurate. We called that as a flag on the way down. Boom. So could you have managed decline downside into a recession that's kind of not such a high drama recession, but consistently grinding lower, hurting, but no great spiller, and then subsequently get a move? That would replicate what happened last time. You do not have the ability of CV19. If contagion takes over, this could drop harder and faster to the downside. So, my take of the best thing, I just wish for Bitcoin, if it wants to crap the bed, it does it fast, wildly, dramatically, and gets it over. We need the time to recover and start moving back up. I do sense that there's quite a realistic possibility that it needs to go lower, one step back, to go 2 steps forward. And at the current moment, this is not what I would classify as a strong, robust snapback rally. We never got our second hammer. We traded all the way down and closed that we hoped for last time when we updated you. Didn't happen. Too soft. Where's Mikey Saylor? Come on, Mikey. Buy 1 gazillion. It's pristine collateral, Mikey. Okay, so there you go. Little spinning top, little green candle. Not convincing. You could probably go lower. If things get ugly, you could go lower hard and fast, quite a bit lower. Not good news. Sorry. Tell me how terrible a man I am for telling you this in the comments below. Why I'm such a jerk for telling you this. Yep, go ahead. Take it out on me. I did this to you. Instead of Mikey Saylor. Let's write a letter to Mikey. Why you no buy the dip, Mikey? When moon, Mikey? Okay, so that's the take on Bitcoin, and that's where we are in the cycle. And if it's to remain a 4-year, which I'm not saying it necessarily should be, because actually the halvening cycle is going to become less and less relevant as Bitcoin's relevance on the dominance reduces. However, Bitcoin is still the biggest market cap by some way, and even on the dominance chart, it still represents a larger percent, 61.67%, than any other summation of all other cryptos. So it's more than half the market by some substantial degree. So I don't expect the 4-year cycle to be over and extending anytime soon whilst that is the case. So we need to see more reserve asset buying, not a reserve asset. Digital derivative fake money is not your reserve asset. That is the Jedi mind trick to fool folks. But it's convenient, it's fast, it's on our rail system, and we can print as much as we like. No, not a reserve asset. If you can't exchange it for something physical that has the legacy of millennia behind it, it is not a reserve asset. Digital scarcity is exactly that. Digital scarcity, made by man, with all the impurities, the greed and the control and the leaky little doorways and the forks and all the other malarkey that they own. Inflation bug here, inflation bug there. So that's where we are in crypto, fine fellas. And in actual fact, I didn't have the stomach to ride this out, but we were a little bit short Sui. I wonder if a certain person is irresponsibly long. And we had a draw on that. And this is the inverted Sui chart, which means up is down, is bad, is actually down. And we did say that it could indeed go to 1.7 while it was 3.2, I think it was. Let's have a draw. There you go. 1.73, and it's making good progress. This is a downside move on a crypto that gave us a very good quality inverted HVF. Note it's inversions. Value high, value lower. It is on target to do it if it remains on course before the 19th of March. If it performs. It has been a tricky ride, which is why I broke out. I didn't want to hold it. I didn't adhere to process on account of such a choppy crypto market. But truth be told, I probably should have. We would be here at 2.2. I sold earlier. Well, I bought back, having shorted earlier and didn't adhere. So 1.7 over there. Bumpy old ride though, difficult one to follow. Don't know quite what to make of it. Looks like it could start going up again, but if Bitcoin gets a major bid, who knows. So Sui is selling off from the 3.4 range roughly here towards the 1.7, and that would represent 3.4 to 1.7. Mathematics dictates a 50% loss in value. Hard hitting indeed. Okay guys, listen, I hope this has been somewhat useful. I recognize it's not any great conviction calls because it's not an easy time to read the tracks in the sand after the major desert rains have come in, which is the volatility, the big moves. Watch the macro, understand there could be something structurally very, very damaging ready to come down the pipe, and this could see a major sell-off in cryptos. There's a real risk of that. Please be careful out there. Remember your stops if you have investment and especially trade with leverage in terms of this market. And in fact, shorts could make you money, but in the absence of method, it can be a hard hold. The rallies can be violent in short markets as they were here, and you may not always be able to adhere to process if it's a choppy journey. Till next time, I'll catch you later. I am defensive, both investment and no leverage trade wise in terms of crypto. Play safe out there, non-advisory, all the usual stuff, and tell me all about it in the comments below. The haters love to comment best. Tell me why I am terrible and I wrecked you, and all the things I've said that didn't turn out. I'd love to hear about it. Can't wait to read. Okay, catch you guys later. Thanks for sharing and caring. Bye bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.